Listen, there's a lot going on in the world right now as it pertains to money, as it pertains to the financial system, and everything that's happening with inflation, interest rates, treasury yields, tariffs, etc. But I'm here to tell you that understanding why it's important to own assets that protect your purchasing power is going to be the key to you being free. So a lot of people, when they think about money, they are thinking about the dollars that they receive from their job. And typically what ends up happening is that you'll receive dollars from your job, you'll exchange your time, your energy, and your resources to go to said job to earn dollars. You then use those dollars to go buy everything that you need in your life. You may pay for rent or a mortgage. You may pay for your car note. You may also you have to pay for your groceries. Maybe you have a child and you have to send them to school, pay for diapers, daycare, etc. And essentially what happens is you are paid dollars for your time and energy for the work or value that you add to your job. Now, here's the thing. Dollars, currency, everything that exists in this world is created. Dollars are created, dollars are printed. Dollars are printed by the Federal Reserve. Treasuries are issued by the United States Treasury, the government. And essentially, when those dollars are printed, that is essentially creating more dollars that exist in the economy. And as a result, when dollars are pumped into the economy and created, the dollars that you're earning from your job lose value. And when I say it loses value if those dollars that you receive for your time and energy, you keep them in a traditional bank account, you're losing money. The reason being is because of the silent tax, which is called inflation. As most people may know, inflation has been going up over the past few years. And as a result, that means that everything that you buy gets more expensive. I'm sure if you go to your local grocery store, you'll probably realize that everything in the store has increased in price since COVID. And this is because the inflow of dollars that are created in the system and essentially is devaluing the dollars that you earn for your time and energy when you go to work. Now, here's the thing. It's important now more than ever to invest in things that give you what's called a store of value. A store of value is allowing you to protect what's called your purchasing power. So essentially, if you get paid $100 today, and then literally a year from now, you receive another $100, the $100 that you earned today is not going to buy you the same amount of basket of goods a year from now. And a lot of individuals don't know that. Their first thought is that I need to go make more dollars. I need to go get another job, which is fine. But if you do get another job, you need to make those dollars work for you by buying assets, assets that protect your purchasing power. Now, there's certain assets that protect individuals' purchasing power and they are viewed as stores of value. Right now, there are a lot of individuals within financial markets, individuals that work at large companies and banks that are flocking to stores of value. One of the traditional stores of value that has existed for thousands of years is gold. Gold has been a really strong store of value and it has protected an individual's purchasing power for thousands of years. Essentially, what gold does is it's very difficult to just make gold out of thin air. You can't, right? There are companies that mine gold. And if the price of gold continues to go up, that means that individuals that have access, that have resources, will invest money in mining companies, and they will then go and get equipment and then go dig for gold in all different parts of the world, Africa, maybe in other areas in Europe, wherever. People will go where the gold is. They'll go explore and try to extract the gold from the ground. But here's the thing. Nobody really knows how much gold actually exists. People will buy gold, but they'll typically buy a gold ETF, which is an exchange traded fund. And that doesn't mean you actually physically hold or own the gold. There are some individuals that will go out and buy bars of gold are gold coins, and they will keep them in their home or maybe keep them in a vault somewhere to essentially protect their purchasing power. They will essentially take dollars that they earn from their job or a business that they own and then go buy gold, which is protecting their purchasing power. So gold has proven to be a very strong store of value to protect an individual's purchasing power for thousands of years. But like I said, there's no real way to verify how much gold actually exists. Central banks, central governments, central parties control gold. And essentially, when they control gold, they are controlling and suppressing the price of gold. Now, there's also other stores of value that have been gaining popularity over the past years. One of those big stores of value has been Bitcoin. And Bitcoin is essentially viewed as digital gold. It has been one of the fastest growing asset classes to ever exist in the world. And Bitcoin is not an asset that is just created out of thin air. It is a protocol, it is a network, and essentially there's a finite amount of Bitcoin that will ever be mined. There are 21 million coins that will ever be mined, and right now about 19 million of those coins have been mined. And within the protocol for Bitcoin, it is essentially allowing individuals that exist all across the world to be able to buy portions of Bitcoin on an exchange like Coinbase, Robinhood, etc. And when they're buying Bitcoin, they are essentially buying a fractional amount of Bitcoin. So Bitcoin essentially is digital gold. It has been an extremely powerful store of value. It has outperformed a lot of other asset classes, and it has protected a lot of individuals' purchasing power when you compare it to other asset classes that exist that may be not outpacing inflationary pressures. Back to the beginning of the example when I was explaining to you all that money is printed out of thin air. So Bitcoin is not something that is just printed out of thin air. It has to be mined by miners that exist within the network that are competing, and they're working to essentially mine for Bitcoin. And they'll receive a reward by mining transactions on the blockchain and contributing to the network, and their reward is Bitcoin. However, there are individuals that own Bitcoin. Some people may sell their Bitcoin. People may transact and be paid in Bitcoin. There are some businesses that actually accept Bitcoin, etc. So it is important now more than ever to understand that you have to protect your purchasing power. You have to own things because, like I began this whole video stating, is that the amount of dollars that will be essentially pumped into the system, it will never stop. Right now, we are on the cusp of potentially a sovereign debt crisis because of a lot of the money that has been pumped into the market and the fact that the bond market has been essentially really chaotic lately. So, as a result, it's more important now than ever for individuals to buy stores of value that protect their purchasing power. If you take anything away from this video, it should be this. Make sure that you're living within your means. Make sure that you're not carrying high interest credit card debt and you're getting rid of that because all of the interest that you're paying on that debt is essentially cutting into your future growth and prosperity. Identify stores of value. Identify things that will allow you to protect your purchasing power. Bitcoin has proven to be a very strong asset class and it has continued to grow. There's been a lot of institutional adoption. There are a lot of companies that are coming out with Bitcoin ETFs, and there's a lot of some companies that are buying Bitcoin and holding it on their balance sheet. But the key is that you want to own things that protect your purchasing power. You want to buy assets. You want to own businesses that give you cash that allow you to be able to invest in things. But at the end of the day, keeping your money in a bank account will only make things tougher for you because you will not be able to outpace inflation by keeping your money in a bank account that is essentially losing value for you. So if you want to learn more about financial literacy, anything that may not be as clear in this video, you should definitely click the link below to schedule a call with me or a member of my team to learn more about our Send Me platform. We also have free resources that you can download, and I'll include those below. And listen, we're just here to continue to spread financial literacy to allow individuals to live more financially responsible lifestyles and to take control of their freedom by owning things that can allow them to be more prosperous in the future. So once again, thank you guys for watching and stay tuned for the next video.